Welcome back to CNBC's Worldwide Exchange. In Asia, equity markets move lower on profit-taking,
which has, of course, felt much of the pain of the housing slump, could see prices continue to fall by double digits in the next year and a half. At a panel discussion in Los Angeles on Monday, both KB Home CEO Jeff Metzger and Countrywide Chief Angelo Mozillo said they think home prices in the Golden State could fall between 10 and 15%. The median price in September was $434,000. That's down 7.5% from last spring. Last month, KB said half of the charges it took in its latest quarter related to inventory in the state of California. Well, our next guest says he does not see the housing market recovering in the U.S. So what does that mean for your investments? Well, joining us now is Brent McLean, Director, Alternative Investments, Helvetia Wealth. Well, Mr. McLean, let's start with Toll Brothers. It may not be surprising that you have a sell rating on the stock, but talk a little bit about why you're rating it, but more importantly, when might be a time to go into this stock?
Good morning. Yes, we feel that the stock at the moment is kind of overpriced at $23 a share. In actuality, we see the stock as a sell, as you said, going down to $20, and then if it floats through that, even further down to $15 a share. When will it recover? It's an interesting aspect of it. As you even mentioned just a little while ago, the recovery in the U.S. and the housing market is still unknown. What is going to happen with lending? Interest rates are going to fall in the near term. How is that going to impact this type of stock or other type of stocks like it? I'm not quite sure. The recovery could come in 6 months to a year. But again, if by the end of 2008 we don't see actually any kind of change, even with Countrywide not showing profit till the end of 2008, we could be in for a bit of a longer term period of maybe a year or longer.
Brent, it's more here in Asia. When you look at the Asian property sector, I see that you have a buy rating on a Japanese property company called Mitsui Fudosan. Why is this?
This is one that we've been looking at for a while at Helvetia Wealth. This is something that we do like, Japan in general. We're very positive on the outlook. But with Mitsui, what they come across as they've just come off their 52-week low just a little while ago. And then as well, their plans that they have through 2016 are pretty strategic in terms of helping create and build workers' environments for new work buildings and offices. And then as well, what they're trying to do is create a bit more of a working environment as well, or a pleasurable environment for those that do retailing and commercialized aspects of shopping malls. And then as well, they actually are trying to improve home life and how they actually see that impacting the Japanese lifestyle. And I think that in of itself is a bit different. And because of their reputation in the past and how well they've done in the past, to me, it seems like something pretty conservative in terms of their growth. And also they have good dividends. So we like it.
Brent, it's Louisa in London. An Austrian property pick. You've got Immofinanz Immobilien Anlagen AG.
Yes, Immofinanz. We like Immofinanz very much because of the fact that they are Austrian. They have expertise in Central and Eastern Europe. This, for us, we do believe that emerging markets is a good play. Eastern and Central Europe is something that we like in terms of commercial property and property development. We like Russia, Ukraine, Poland in particular, as these countries are continuing to grow. They're continuing to enhance their own environment with the commercial buildings, offices, real estate, etc. I think the interesting play on this actually is as each big city needs to reconstruct and improve itself, you're seeing more and more commercial development coming in and actually enhancing the lifestyles there for the people as well. You see also the benefit of Central and Eastern Europe coming in, that more companies are moving offshore, if you will, or near shore into these locations, and this is actually providing a good basis for employment for the locals as well. So that's why I think we think at Helvetia Wealth this is a good play. Yes, go ahead.
Brent, thanks for the insight on those companies. No, thank you very much. Brent McLean, Director, Alternative Investments, Helvetia Wealth.
All right, thank you very much.
Well, coming up, China keeps branching out. 3 U.S. private equity firms have held preliminary